Pretty ugly day out there today. S&P 500 down about 1.8%. NASDAQ down about 2.2%. It was a little bit worse for the small caps, dropping by 2.7%. But really, when you look at the S&P, it's coming to a pretty important level here at 5,800. Not only is it important from a technical perspective, but really more so from an option perspective. When we look at the SPY gamma exposure, this is from optioncharts.io. Basically, you can see 5,800, big level of support from a gamma perspective on the SPY. When we look a little bit further, you can see very much so in a negative gamma regime, really. But more importantly, when you look at the S&P, you can see 5,800, also big level of gamma support. And so this is a really important spot for the market right now, because you can clearly see today that the S&P 500 basically bounced off of that 5,800 region. And if 5,800 breaks, just from where gamma is and from a technical perspective, you can see 5,700 really becomes the next major level of support. And what's really important here is trading range, right? We're in a negative gamma trading zone, and that means that basically market makers are going to be, their hedging flows are going with the direction of the market. So it creates these scenarios where you can see really violent rallies and you can see really violent sell-offs, because market makers are just going with the flows. And even when you look at it from a delta perspective, you can also see that there's not really much positive delta out there. So again, as the market's going down, they're going to have to be selling, deltas to basically, stay hedged. So this just creates, an environment that's going to create a lot more volatility overall. And it's one of the reasons why you see the VIX up here now at 22.7. And what's interesting about this is that 22.7 or 22.8, if you just divide that by 16, what this is kind of a 1.4% move, and today we moved by 1.8% almost. And what this actually suggests is that the VIX could really be even a little bit higher. It's not going to necessarily snap back and go down right away, because if you look, you can see we had a 1.6% move. We've had a 1.6% move, and now we had a 1.8% move on top of it. We just had a 1.7% move on the 21st. So we've been getting a lot of these big 1 to 2% moves on a daily basis. And that really argues for a VIX being up here at around 20-ish or so. And so and obviously as the market goes down, we're seeing implied correlations moving up. And this is an indication also that the market is starting to move much more closely. We're seeing implied volatility levels rising across different tickers. And this is essentially a situation that could continue to deteriorate. But again, you need key levels to break, and right now S&P 500, that key level is 5,800. And really, until 5,800 breaks, you're kind of just waiting to see what really is going to transpire here, because once 5,800 breaks, you can then start thinking about lower levels, 5,700 and potentially even lower than that. And even on the NASDAQ, it's very similar. You can see actually today we just missed filling the gap from the election, which was on November 5th. Remember, we got that post-election gap. The NASDAQ, while the S&P filled it, the NASDAQ never did. And you can see that this region in here between 19,900 and 20,200 is a pretty important area of support, not just from the perspective of the gap, but you can see that this was the high back here in August. And if you kind of even go further back, you can see this was an important level. So this area in here is a very important level of support for the NASDAQ. The fact that it broke below this point right here can begin to tell you that maybe we formed some sort of double top pattern in the NASDAQ. And that means that there's further here to decline. Certainly if you, and then you kind of push that down, what this is implying is that maybe we move back into the levels last seen in September, if that is indeed a double top. Certainly if you look, you can see 20,000 big level here that needs to hold. And then after that, you can see the levels, the gamma gets kind of thins out until 19,000. So you're looking again like 20,000 is a really big important level that needs to hold. And again, we're in negative gamma, so those market maker hedging flows are going to go along with the market. And it's really the same thing for the deltas. So again, this creates an environment that could result in, more downside here if, again, it's warranted. And again, you're getting these big moves in the market, so you're not going to necessarily see implied volatility crushes like we normally would if things were a little bit calmer. In other words, this scenario has been building now for some time. And even when we look at other things in the marketplace, like high yield credit spreads, you can see that the CDX high yield credit spread today actually rose to 319. We had done a video, I think, on Friday, or maybe it was on Saturday. I had done one for you guys, and I had talked about credit spreads and those really being the key here of signaling when this market maybe was getting a little more nervous. And again, we're getting closer, but clearly we need to break some more levels of support, of resistance up here around 321. But you can see that right now this downtrend clearly is broken. But it's really important to remember credit spreads are still historically very, very low. So, I mean, these things could rise quite significantly from where it is at this point in time. I'm not saying it's going to happen, but I'm saying that credit spreads can widen a lot from where they are right now. And when credit spreads start to widen, that's when you really start seeing that multiple contraction in the stock indices. Right now, we're still at a very low level. Things are still very tight. While they're moving higher, they're certainly not screaming danger. But what it's telling us is that momentum is potentially building, and these spreads can continue to widen and move higher as the days go on. And clearly what the market is beginning to tell us at this point, when you look at 10-year rates, I talked about this today in a video for my subscribers. But what's clear is that 10-year yields are moving down. Again, we're now back to where we were back on December 9th at the 416 level, but they are getting a little bit oversold here. You can see the RSI is at 27.5, and you can see the lower Bollinger Band, we're below that, which is suggesting that 10-year yields are getting a little bit too low based on a purely technical basis. But if you look at the price action today in rates, you saw 2-year yields come down, but you're also seeing, the spread really contracting. And what this could be telling us again is the market's getting concerned about, stagflation like a type of environment, which is something I've been flirting with and talking about now for off and on for some time, that we still have these high inflation rates. ISM prices paid index manufacturing was the highest since June of 22, and the market right now it doesn't really know what the outcome of all of these tariffs are going to be, what the potential impacts are going to be. Plus, we already have pretty sticky inflation, and so that it's very clear when you look at what's happening in the market. You're seeing basically the curve flatten a little bit, although it's not really very clear yet at all in terms of where the ultimate direction will be. I mean, clearly if rates continue to break down and break below this 416 level, then you're talking about going back to 4% and potentially even lower than that. And I would be really surprised to see that happen, only because I don't think the economy is in recession at this point. It doesn't mean we can't be heading there, but I think it would be sort of surprising to see that happen in that way. The dollar also sold off today as well, which is also kind of telling us that the market's worrying about, future growth prospects. But again, right now, I think, we're just looking at the very start of something. It could get much worse, if we start seeing some of these levels broken. But right now, we don't really have enough to go on, other than the fact that we have, important levels of support coming up, and they're getting very close. Anyway, I hope you have a good evening. Please remember to subscribe to this channel, like this video, share with your friends, and please remember to help me grow my YouTube channel in 2025. Have a great one. Bye.